Hi all, welcome to i-tutor Academy. Today we will discuss Unit 12, subsection 12 of Mmpc 0009, and this is functions of inventory. And as mentioned earlier, inventory is necessary evil. So necessary because it aims at absorbing the uncertainties of demand and supply by decoupling the demand and supply subsystems. And thus, an organization may be carrying inventory for the following reason. So first one is demand and lead time uncertainties necessitate building of safety stock, that is buffer stock, so as to enable various subsystems to operate somewhat in a decoupled manner. And it is obvious that the uncertainty of demand and supply, the larger will have to be the amount of buffer stock to be carried for prescribed service level. And time lag in deliveries also the necessitate building of inventories. If the replenishment lead time are positive, then stocks are needed for system operation. Then cycle stocks may be maintained to get the economics of scale, so that the total system cost due to ordering, carrying inventory, and backlogging are minimized. Technological requirement of batch processing also build up cycle stocks, and stocks may build up pipeline inventory or work in progress inventory due to fitness of production and transportation rates. This includes material actually being worked on or moving between work centers or being in transit to distribution centers and customers. And when the demand is seasonal, it may become economical to build inventory during period of low demand to ease the strain of peak period demand. Then inventory may also be built for other reasons, such as quantity discounts being offered by suppliers, discount sales, anticipated increase in material price, and possibility of future non-availability, etc. And different functional managers of an organization may view the inventory from different viewpoints, leading to conflicting objectives. And this calls for an integrated systems approach to planning of inventories, so that these conflicting objectives can be scrutinized to enable the system to operate at minimum total inventory related cost, both explicit such as purchase price as well as implicit such as carrying, shortage, transportation, and inspection cost. Concept and technique is useful in analyzing of these problems to arrive at a sound policy decision, the focal point of presentation in this unit. And next is classification of inventory system, that is 12.13 is the subsection. In classification, first one is lot size reorder point policy. So what is that lot size reorder point policy? Under this operating policy, the inventory status is continuously reviewed, and as soon as the inventory level falls to prescribed value called reorder point, a fresh replenishment order of fixed quantity called economic order quantity, that is EOQ, is initiated. Thus, the order size is constant and is economically determined. And this is one of the very classical type of inventory uh, policies, and a lot of mathematical analysis has appeared on this type of policy. So here is one figure, that is typical inventory balance for EOQ reorder point policy. Okay. So the solid line in the figure represent the actual inventory held in practical situation with a finite lead time. The lead time being defined as the time delay between the placing of a replenishment order and its subsequent receipt. And the broken line indicate the inventory that would be held in the ideal situation if no lead time existed. So lot size and reorder point are the two decision variable involved in the design of the policy. Next is fixed order internal interval scheduling policy. So what is that? Under this policy, the time between the consecutive replenishment order is constant. So there is a maximum stock levels prescribed, and the inventory status is reviewed periodically with a fixed interval, that is T. Stock level is S and interval period is T, and at each review an order of size Q is placed which takes the stock on hand plus an order equal to maximum or equal to the maximum stock level. Thus order quantity could vary from period to period, and this policy ensures that when the level of stock on hand is high at a review, a smaller size replenishment order is placed. Okay, so here is one figure. So it's a fixed reorder cycle policy. It shows the typical stock balance under this fixed reorder cycle policy, and S the maximum stock level and T the review period are the decision variable under this policy. And next is optional replenishment policy, that is SS policy. This is very popularly known as the SS, that is smallest and capital S policy. Okay, so here is figure. Typical inventory balance is SS policy. Okay, so and the status of stock is periodically reviewed, and maximum stock, that is capital S, and the minimum stock, that is small s. Okay, so that is are prescribed. And if at a time of review the stock on hand is less than equal to S, and the order of size Q is placed so that the stock on hand plus an order equal the maximum stock level S. If stock on hand at review is higher than S, smallest, so no order is placed and the situation is reviewed at the time of next review period. And capital S, small s and T, that is review period, are the decision variable in the design of such an inventory policy. Next is other types of inventory system, and there may be other policies which may be special cases of the policies mentioned above, or may be combination of these policies. As a special case, that is smallest and capital S policy, we may have S1, that is S policy, or one for one order policy when the maximum stock level may be up to S, and whenever there is demand for one unit, a replenishment of one unit is ordered. Such a policy may be quite useful for slow moving expensive items. And we may use a combination of lot size reorder point policy and fixed interval order scheduling policy. And yet another variation of inventory policy could be multiple reorder point policy, where more than one reorder point may be established. And other type of inventory system may be static inventory system, when a single purchase decision is to be made which should be adequate during the entire project duration, and such a decision are not repetitive in nature. And other initial provisioning decision may be with respect to repairable assemblies such as engines and gearboxes, etc., and in a bus which may have to be overhauled, and for which we have to find adequate number of spare engines to be provided initially. And the right choice of an inventory policy depends upon the nature of the problem, usage value of an item, and other situational parameters. We must first select an operating policy before determining optimal values of its parameters. And next is selective inventory management, that is role of selective inventory control. And one of the major operating difficulty in the scientific inventory control is an extremely large variety of items stocked by various organizations. These may vary from 10,000 to 100,000 different type of stocked items, and it is neither feasible nor desirable to apply rigorous scientific principles of inventory control in all these items. Such an indiscriminate approach may make cost of inventory control more than its benefit, and therefore may prove to be counterproductive. And therefore, the inventory control has to be exercised selectively, and depending upon the value, criticality and usage frequency of an item, we may have to decide on an appropriate type of inventory policy. The selective inventory management thus plays a crucial role, so that we can put our limited control effort more judiciously to the more significant group of items. And in selective management, we group item in few discrete categories depending upon value and critically and usage frequency. Such an analysis are popularly known as ABC and VED and FSN analysis respectively. And this type of grouping may well from the starting point in introducing scientific inventory management in an organization. So what is ABC analysis? So this is based on very universal Pareto's law, that in any large number we have significant few and insignificant many. For example, only 20% of the item may be accounting for the 80% of the total material cost annually. These are the significant few which required all utmost attention. So this is the classification of item ABC analysis. Figure is this. So A is 10 percentage item claiming approximately 75% of annual usage. B is 15% of item claiming approximately 15% of annual usage, and 75%. C is 75% of claiming approximately 10% of annual usage. Okay, so here is the figure. And ABC analysis showing percentage of number of inventory item and percentage of average inventory investment, that is annual usage value. And annual usage value is the demand multiplied by unit price, thus giving monetary worth of annual consumption. And it can be seen from this figure that 10% item are claiming 75% of the annual usage value, and this constitute the significant few, and these are called A class item. And another 15% item account for another 15% annual usage value and are called B class item. And a vast majority of 75% item account for only 10% expenditure on material consumption and constitute insignificant many and are called C class items. So to prepare an ABC type curve, we may follow the following simple procedure. One is arrange item in the descending order of the annual usage value. Annual usage value is equal to annual demand into unit price. And next is identify cutoff points on the curve when there is a perceptible sudden change of slope, or alternatively find cutoff point at 10%, next 20% or so, but do not interpret these two literally, rather as a general indicator. A very simple empirical way to classify item may be adopted as follows. An average annual usage, that is total material cost per year divided by total number of items. A is class item, C is class item. In between we have B class item also. So once the item are grouped into A, B and C category, we can adopt different degree of seriousness in our inventory control effort. Okay. So other variant ABC analysis are VED analysis. So this is analysis attempt to classify item into three categories depending upon the consequences of material stock out when demand. Okay. And FSN analysis, it's not all item are required with the same frequency. Some material are quite regularly required, it some other are required very occasionally, and some material may have become obsolete and might not have been demanded for years together. Okay. And inventory management of slow moving item will be given, that is SCD analysis, HML analysis, XYZ analysis, SOS analysis. So these are the different categories of analysis. So please go through this section, and you just read from your Igno study material also, it will be more clear. And so this is about today's section. For more MBA series, you just do like, share and subscribe our channel. Thank you so much.
i-tutor Academy presents Ignoumba MBA complete syllabus coverage classes for individual students, semester-wise subject with online and flexible timing. For more details, contact on +916 238 217 885.